welcome to Griffonomics.
Hey, it's great to be here.
So today is February 27, 2026. And, if you look at the news lately, the world just feels, I don't know, heavy. The whole geopolitical map is kind of shifting under our feet right now.
It really is. I mean, the tension is palpable everywhere you look.
Right. And because of that, we're going to take a journey today into the industrial heart of the American war machine. But, and this is key, we are not going to the places you usually see on the evening news.
No, we're definitely not talking about the trillion-dollar F-35 program today.
Exactly. We're not talking about aircraft carriers that cost more than the GDP of, like, a small European nation.
Yeah, we're looking at the complete other end of the spectrum. We are looking at the gritty, the loud, and the increasingly profitable world of mass.
Mass speed, and probably most importantly, affordability. Today, we are doing a deep dive into Kratos Defense and Security Solutions, ticker symbol KTOS.
KTOS, yep.
Now, if you follow the defense sector even casually, you probably know the name. They're the cool company.
The ones building the sci-fi-looking drones.
Right, the stuff that shows up on the cover of Popular Mechanics.
Yeah.
But something massive just happened with this company, which is why we're digging into them today.
It did. We're looking at them not just because they have flashy prototypes, but because they literally just reported their fiscal year 2025 results. And honestly, reading through these reports, it feels like a real inflection point.
Like they finally arrived.
Exactly, like they're stepping into the big leagues.
The numbers are definitely telling a story, and it is a loud one.
Yeah.
Let's hit the highlights before we get into the weeds, just to set the table for you listening. So revenue for 2025 came in at $1.347 billion. That is up 18.5% from the year before.
And just to contextualize that for a second, that is nearly 20% growth in an industry that usually grows at the speed of government bureaucracy.
Which is to say, incredibly slowly.
Right. I mean, the prime contractor usually celebrates, 3 or 4% growth? And Kratos is out here sprinting at 18.5.
It's wild. And their backlog, so the money they have signed contracts for but haven't actually collected yet because the work is still being done, that is at a record $1.573 billion.
Massive.
And the pipeline, like the potential deals they're actively chasing right now, that's sitting at a staggering $13.7 billion.
Yeah, those numbers are huge, but they aren't the only reason we're talking about them today. We are really talking about them because of what just happened this month, right here in February 2026.
A cash raise.
Yeah. Kratos just went to the public markets and raised $1.17 billion in cold, hard cash.
A literal billion-dollar war chest. And they did it by selling stock, which we'll definitely talk about that later because that diluted the current shareholders and caused a bit of a stir.
Oh, absolutely it did.
But the mission of this deep dive is to figure out why. Why do they need $1 billion right this second?
It's the billion-dollar question, and I really think the answer lies in this concept called the Valley of Death.
The Valley of Death.
Yeah, in the defense world, there's this famous trap. You invent a cool prototype, the generals come out, they love it, it flies, it works perfectly, it looks amazing in the sizzle reel.
Right.
But then nothing happens. You can't bridge the gap between building one awesome prototype by hand in a workshop and building 500 units a year on a fully automated factory line.
Because it's too expensive.
You run out of money or the Pentagon's bureaucracy just slowly bleeds you dry. Yeah. That's the Valley of Death.
So the core question we have today is, has Kratos actually crossed that valley?
I think the evidence we have in front of us, in these reports suggests they are climbing out the other side right now. They're moving from being an R&D firm, like a science project shop, to a true production prime.
And that transition is messy.
It's incredibly messy. It's expensive, but it is where the real money is made.
So let's unpack this. We need to start with their philosophy. Because to really understand Kratos, you have to realize they are not just a mini Lockheed Martin. They aren't a mini Boeing. They think fundamentally differently. Their CEO, Eric DeMarco, has this phrase he just repeats like a mantra: affordability as a technology.
It's such a fascinating concept, and to understand it, you kind of have to look back at history. Think about the Cold War.
Right.
The whole U.S. strategy was overmatch.
Right.
We build a tank that is 10 times better than the Soviet tank, even if it costs 10 times as much. We build a fighter plane that is totally invisible and basically untouchable.
And that strategy works great when you're fighting insurgencies or smaller powers.
Exactly. But now
yeah,
we're looking at near-peer adversaries. And specifically, and the sources call this out directly, we are looking at the threat from the Chinese Communist Party, the CCP.
Yeah, the sources make it clear this isn't abstract anymore. It's a very specific geographic reality.
Right. Because if you are fighting a conflict in the Pacific against an absolute industrial giant like China, you cannot afford to trade a $100 million fighter jet for a $2 million missile.
You'll just go bankrupt.
You will go bankrupt, and worse, you will run out of planes way before they run out of missiles. It's just a math problem that the U.S. loses under the old rules.
Which brings us to, honestly, the word of the day.
Yeah.
If you take one thing away from this deep dive, it's this word, attritable.
Attritable. Yeah, it sounds like some made-up corporate jargon, but it is critical to the future of warfare.
Break it down for us.
It basically means high performance, but low cost enough that we can stand to lose it in combat. Kratos builds these jet drones, like the Valkyrie, that cost somewhere between $5 million and $10 million a pop.
Which, I gotta say, still sounds like a ton of money to me. Like, if I personally lost $5 million, I would be devastated.
Oh, for sure. But in defense terms...
In defense terms, it's a rounding error. I mean, an F-35 is $110 million, plus the cost of the pilot, plus the cost of years and years of training that pilot.
If a Kratos drone gets shot down over the Pacific, it's a bad day, yeah, but it's a tactical calculation. It's like losing a pawn in a game of chess. Losing an F-35 with a human pilot, that's like losing your queen.
So affordability as a technology literally means the price tag itself is the main feature. Being cheap allows you to have mass. It allows you to swarm the enemy.
Exactly. Think about it from the enemy's perspective. If you send in one F-35, the enemy focuses all their advanced radar on that one multi-million-dollar asset.
Right.
But if you send in one F-35 surrounded by 20 Valkyrie drones, the enemy radar lights up like a Christmas tree. They have no idea what to shoot at. So they start wasting their own expensive surface-to-air missiles shooting down your cheap drones.
You essentially bankrupt the enemy's ammunition supply.
Exactly. That is the philosophy of affordable mass.
And what's wild is this isn't just theory for Kratos. One thing that really stands out in the reporting is this culture of products over PowerPoints.
Yes. This is their massive cultural differentiator. Most traditional defense contractors operate on a cost-plus basis. They literally sit around and wait for the Pentagon to say, hey, we want a new widget.
And then they say, okay, pay us $1 billion to design it.
Exactly. Then they spend 2 years making a gorgeous PowerPoint presentation about what they theoretically could build if you give them more money.
The classic vaporware phase.
Precisely. Kratos doesn't play that game. They use their own money, their own internal R&D cash, to build the thing first. They actually built and flew the Valkyrie drone before the Air Force even had a formal program on the books for it.
Which is incredibly risky. I mean, if nobody buys it, you just burned millions of your own dollars in the desert.
It's massive risk, but it gives them a huge first-mover advantage. While the other big primes are still arguing over slides in a conference room, Kratos is out in the test range actually flying the hardware.
So they can show up to the Pentagon and say, hey, we have a jet drone flying right now. Do you want to buy it?
Exactly. And because they took that risk up front, they are now basically the only ones with a mature, flying, attritable jet drone that is actually ready for full-rate production today.
That time advantage is the moat.
You can't cheat time. Even if Boeing or Lockheed wants to catch up and spend $1 billion tomorrow, they still have to do the flight hours. Kratos has already done them.
Okay, so they have the philosophy dialed in, they have the head start, but let's actually look at the business itself, because when you look under the hood of these financials, this isn't just a drone company.
No, and that is such a common misconception. If you only look at the headlines, you think Kratos is just making Valkyrie drones all day. But the business is actually split into two very different engines. You've got the backbone and you've got the growth engine.
Let's talk about the backbone first. That's Kratos Government Solutions, or KGS.
Right. KGS is the massive unseen part of the iceberg here. It represented 78% of their total revenue in 2025. That's about $1.055 billion.
Wow.
Yeah, if Kratos completely stopped making drones tomorrow, they would still be $1 billion defense company just because of KGS.
So what are they actually doing in this segment? Because it's definitely not as sexy as stealthy jet drones.
No, it's the plumbing of the war machine.
Yep.
It represents pure stability. We're talking about microwave electronics. We're talking about rocket support systems, satellite communication gear.
Okay, microwave electronics. Whenever I hear that, I always picture reheating a frozen burrito.
I know. I wish it were that simple. No, we are talking about highly specialized, critical electronic components. Things like amplifiers, oscillators, signal converters that go inside missiles and radar.
The brains of the weapons.
The eyes and ears, really. And where do these end up? They end up everywhere. The Patriot missile system, the Iron Dome in Israel, PAG, these are the defensive systems protecting cities and cities right now all over the world.
And the beauty of this business, from a financial perspective, is that it's extremely sticky.
Sticky is the perfect word. Once your specific microwave chip is designed into a Patriot missile, Raytheon isn't going to just switch it out for a slightly cheaper one next year.
Why not?
Because the cost of requalifying a new part with the government is astronomical. It takes years of testing to prove the new part won't fail in combat. So once you are designed in, you are basically in for the life of the program. It provides this steady, recurring floor of revenue.
So KGS keeps the lights on, it pays the bills, but then you have the other side of the house, unmanned systems.
The unmanned systems segment, this is only about 22% of their revenue, roughly $292 million in 2025. This includes their legacy target drones and the new tactical drones like the Valkyrie.
Now, target drones are a really interesting business model to me. Basically, we pay Kratos to build a drone that acts exactly like an incoming Russian or Chinese cruise missile, just so our Navy can practice shooting it down.
It's the ultimate consumable product. It is literally designed to be destroyed. They get paid to build it. The Navy blows it up over the ocean, and then they get paid to build the exact same thing again. It's a fantastic recurring business.
But the valuation premium, the reason the stock trades at such a high multiple is because investors believe these drones are going to graduate from just being targets to being shooters.
Exactly. That's the shift. Target to tactical. But before we get too hyped about the future, there is a serious catch here with their current contracts. The sources mention a very heavy reliance on fixed price contracts.
Yeah, about 70% of their work is fixed price. Break down why that matters right now.
Well, in defense contracting, you usually have two main types: cost plus or fixed price. Cost plus means the government pays all your expenses to build the thing, plus a guaranteed profit percentage on top.
So if the cost of steel doubles, the government just writes a bigger check.
Right. You carry zero inflation risk. But fixed price means you agree to build a drone for exactly $3 million, period.
And we have been living through some pretty brutal inflation lately.
Exactly. If you signed a fixed price contract 3 years ago to deliver drones for $3 million, but your labor costs just went up 20% and aerospace aluminum went up 15%, you are eating that cost.
Ouch.
Yeah, that is the margin squeeze Kratos has been dealing with in this segment.
So why do they even take fixed price contracts?
Because the Pentagon loves cost certainty. They are tired of cost overruns, and Kratos is betting that as inflation cools down and as they get better and faster at manufacturing, they can actually widen those margins. If they can figure out how to build that $3 million drone for $2.5 million through pure efficiency, they get to keep all the difference.
It's a huge bet on their own operational efficiency.
It is.
Okay, so we have the stable backbone, we have the flashy drone business with some margin pressure.
Yeah.
But here is where it gets really interesting to me. Everyone wants to talk about the drones.
Right?
But if you look at their 2026 guidance, the real money, like the massive immediate cash injection, is actually coming from something else entirely. Hypersonics.
The Hypersonics Alpha. This is the absolute most immediate growth driver they have right now. If you want to know where the Kratos stock price is going to go in the next 12 to 24 months, you have to look at their hypersonic numbers.
The numbers here are just staggering. Yeah. Management is saying their hypersonic franchise revenue is expected to double to around $400 million in 2026.
Double in 1 year.
And then grow another 75% to $700 million by 2027.
That is exponential growth. You almost never see that in heavy hardware manufacturing. And it's being driven by a very specific, terrifying problem the United States has. We are behind.
Behind it.
Behind everyone that matters in this space. Russia has already fielded hypersonic missiles. They've actively used them in Ukraine. China has a very robust, highly advanced hypersonic program.
And the U.S.?
The U.S. is playing catch-up. Hard. And to catch up in aerospace, you have to test your designs constantly.
But you can't just test a hypersonic missile in a regular wind tunnel, right?
No, not really. You can't simulate Mach 5 or Mach 10 perfectly in a lab on the ground. The physics of heat and friction at that speed are too complex. You actually have to fly it in the real atmosphere. And the U.S. has a massive shortage of testing infrastructure.
We just don't have the ranges.
We don't have enough test ranges, and more importantly, we don't have enough flight test beds.
Which is where Kratos stepped in with this MACHTB 2.0 contract.
Right. MACHTB, it stands for Multi-Service Advanced Capability Hypersonic Test Bed. This is a $1.45 billion contract. It's the largest in the entire company's history.
So what is a test bed exactly? Break that down.
Think of it like a high-speed taxi service for military science experiments.
Okay.
If Raytheon or Lockheed invents a new scramjet engine, or maybe the Army formulates a new heat shield material, they need to get it up to 100,000 feet and Mach 5 to see if it melts.
Right.
Kratos provides the booster rocket. They strap the experimental tech to their rocket, they launch it, they hit the speed, and they beam the data back down.
So they are literally the Uber for hypersonic testing.
Exactly. And because the Pentagon is in full panic mode about being behind China, they are throwing money at this problem. Speed is the absolute priority.
And what's wild is Kratos is vertically integrated here. They aren't just building the shell of the vehicle. They are building the engines themselves. The sources specifically mentioned their Zeus and Oriole solid rocket motors.
This is such a key detail for their margins. They have 120 of these solid rocket motors on order right now. Deliveries are scheduled to start in Q3 of 2026.
120 massive rocket motors. That sounds like a lot of fire and smoke.
It is a massive industrial undertaking, and by building their own motors, they control their own destiny. They aren't sitting around waiting on a legacy supplier like Aerojet Rocketdyne to send them an engine so they can finish a vehicle.
They just build it in-house.
Right. That protects their production schedule, and it massively lowers their internal costs.
And there's a little teaser dropped in their recent earnings call about a sole source award.
Oh, this is the speculative juice that Wall Street loves. CEO Eric DeMarco casually mentioned they're expecting an additional $1 billion plus sole source hypersonic program award by the end of 2026.
Just to clarify, sole source means no competition, right?
It means the Pentagon went directly to them and said, "You are literally the only ones who can do this job." It almost certainly means Kratos is designed in to a highly classified black budget program.
Wow.
When you hear sole source in the defense industry, you should immediately think guaranteed revenue. It implies you are completely indispensable to national security.
So hypersonics is the immediate cash cow right now. But let's pivot back to the rock star of the portfolio, the tactical drones, the Valkyrie. Because while hypersonics pays the bills today, the drones are the long-term vision. This is the mass part of the affordable mass equation.
The XQ-50A Valkyrie. This is the airframe that looks like a miniature stealthy F-35.
So the production numbers on the Valkyrie are finally starting to move.
Yeah.
They're ramping up from building about 8 aircraft a year currently to a target of 40 aircraft a year by 2028. Now, I have to be honest. When I hear the number 40, I don't exactly think mass production.
Right.
I think of like a boutique Italian sports car manufacturer.
Right.
Why is 40 a big deal?
Because context is everything here. You have to completely reframe your idea of scale. These are not DJI camera drones you buy at Best Buy.
Sure.
These are 30-foot-long jet aircraft. They are capable of high subsonic speeds. They carry internal weapons bays, and they fly autonomously alongside manned fighters.
So it's a real fighter jet, just a bit smaller and without a cockpit.
It absolutely is. So going from building 8 of these by hand in an engineering workshop to building 40 a year on a synchronized production line, that is a massive industrial leap.
It changes the whole company.
It requires complex tooling, hardened supply chains, rigorous quality assurance. It is the literal difference between a garage startup and a tier 1 factory.
The 40 is just the beginning.
Yeah.
Right? Like that's just the initial target.
Exactly. 40 is just the initial rate for 2028. If the Air Force fully adopts the CCA program, that's Collaborative Combat Aircraft, that number could easily go into the hundreds per year. But Kratos has to prove to the brass that they can flawlessly build 40 first.
Speaking of that CCA program, there was a very interesting strategic move Kratos made recently. They teamed up with Northrop Grumman for the Marine Corps program, the MUX TAC Air.
This was, in my opinion, a brilliant, brilliant move by Kratos.
But why? Why share the pie? Kratos built the drone themselves. Why let a giant prime like Northrop in the door?
Because Kratos is still seen by the old guard as the little guy. The Pentagon gets very, very nervous handing a multi-billion-dollar mission-critical combat program to a company that isn't a traditional prime.
They worry about the scale.
They worry about global logistics, ultra-high security clearances, decades of sustainment. By teaming up with Northrop Grumman, Kratos instantly buys legitimacy.
So essentially, Kratos builds the truck, and Northrop puts the brains inside it.
That's a perfect analogy. The revenue split is roughly 50-50. Kratos builds the physical airframe. The Valkyrie and Northrop handles the classified mission systems, the advanced sensors, the software integration.
It solves the political problem of, can we really trust this small-cap tech company?
Yes, because Northrop Grumman is standing right next to them in the boardroom.
And it completely validates the hardware. If Northrop is willing to put their legendary name on a Kratos jet, that tells the whole world the jet works.
It does, and we are seeing this hardware validated elsewhere, too. The sources mention the Pentagon's Drone Dominance Program, which is a massive $1.1 billion initiative.
Replicator, right? Or something adjacent to it.
Exactly, part of that broader push. And Kratos was officially selected for Phase 1. They are directly in the mix for the biggest drone swarm contract in history.
And we really can't ignore the international angle here either. There was a brief mention in the reports of a drone called the Mighty Hornet IV being tested with NCSIST, that is the National Chung-Shan Institute of Science and Technology.
Which is located in Taiwan.
Right, Taiwan. Let's pause on that.
That is a huge flashing signal. Taiwan is the geopolitical flashpoint of the century. It is the most dangerous, contested geography on Earth right now.
If China invades, that's where the war happens.
Right. So if Kratos is actively testing drones with Taiwan's absolute top military research institute, it means their hardware is being specifically evaluated for the most critical defense scenario on the planet.
It's real-world application. They aren't just testing over an empty desert in Nevada. They are testing in the actual zone of potential conflict.
Exactly. It completely signals international demand in hot zones.
Okay, so we have hypersonics making immediate money. We have tactical drones scaling up for the future. But there's a third leg to this stool that often gets totally overlooked by the media: space and software.
Oh, the hidden gem, their open space platform.
Honestly, this sounds like a Silicon Valley tech startup product.
It basically is. And to understand why it's a big deal, we have to look at how military satellites used to work. Historically, satellites were completely hardware dependent.
Meaning what?
Meaning, if you launched a $500 million satellite into orbit, you needed a very specific custom-built rack of servers and copper cables on the ground just to talk to it.
So one satellite, one specific control room.
Basically, yeah. And it cost anywhere from $5 million to $10 million just to set up that one physical ground station. It was rigid. It was incredibly expensive.
And OpenSpace changes that entirely.
OpenSpace virtualizes the signal. It takes all that clunky hardware and turns the ground station into software. You can run it dynamically in the cloud.
Wow.
It's basically the difference between having to buy a dedicated DVD player for one movie versus just opening the Netflix app on any screen. You don't need the specific expensive hardware anymore. You just need the software app. And
they just won a major contract with Airbus for the Omansat 1.
Which is huge because Airbus is a global aerospace giant. They are choosing to use Kratos' software to run a modern, software-defined satellite, and this matters immensely because the entire future of war is software-defined.
Explain that connection for the listener. Why does software virtualization matter for a shooting war?
Because things in combat change fast. If a communication satellite needs to instantly change its mission or its frequency because of Russian jamming, you can't exactly send a mechanic up there with a screwdriver.
Right, it's in space.
You have to reconfigure it via software. But if your ground station is just rigid 1990s hardware, you are stuck. You can't adapt. If it's open space software, you literally just push an update to the cloud. Kratos owns the ground infrastructure that allows for that flexibility.
It connects everything. The drones, the hypersonic missiles, the satellites. It all runs on this web of data.
And Kratos is quietly positioning itself to be the primary carrier of that data.
Okay, we have painted a very, very rosy picture so far. Growing revenue, cool futuristic tech, massive contracts.
Yeah.
But we have to look at the financial reality. The risk factor.
Yeah.
Because that $1.17 billion cash raise we talked about at the very beginning, that came at a steep cost.
It came at the direct cost of the existing shareholders.
Dilution.
Yeah. If you owned Kratos stock in January, your slice of the company pie got significantly smaller in February when they issued all those new shares. Dilution is painful. It creates a lot of anger in the retail investor base.
But the real question is, was it necessary? Did they have to do it?
The experts, and obviously Kratos management, say yes, absolutely. They call it the dilution engine. They are purposely burning cash today to build the industrial machine of tomorrow.
Look at the free cash flow projections in the report. Free cash flow is expected to remain totally negative until 2028.
That is a very long time for a public company to bleed cash. That means for 2 straight years, more money is going out the door than coming in from sales.
Why? Where's all that money actually going?
CapEx. Capital expenditures. They are guiding to spend $135 million to $145 million in 2026 alone just on facilities.
Building physical stuff.
Right. They are building the new Prometheus facility for rocket motors. They are building engine testing facilities. They are doubling down on heavy manufacturing infrastructure.
It's a high-stakes bet. They are betting that if they pour the concrete and build the factories now, the big government contracts will eventually fill them.
It is the classic field of dreams strategy, right? If you build it, they will come.
But in the defense sector, that is incredibly risky.
Oh, it's terrifying. If the Pentagon budget suddenly gets cut, or if a new administration cancels the CCA drone program, Kratos is stuck paying for an empty state-of-the-art factory and a ton of overhead.
Although, to their credit, the balance sheet looks weirdly safe otherwise. Kratos has zero long-term debt.
Zero long-term debt. That is their ultimate safety net. They have what we call a fortress balance sheet. That $1.17 billion they just raised, it's just sitting in the bank right now.
It gives them a massive cushion.
It does. They can weather a political storm or a program delay that would instantly bankrupt a smaller defense tech company. They don't have to worry about high interest rates crushing them.
But the stock valuation, we mentioned earlier, trades at 124 times forward earnings.
Yeah, that is priced for absolute perfection. That is a Tesla-style tech valuation on a company that bends metal. Investors are not paying for 2026 performance. They are paying a premium for what they think Kratos will look like in 2030.
Which means the stock is going to be volatile.
Extremely volatile.
Right.
If Kratos stumbles even slightly, if the Valkyrie gets delayed by 6 months, if the hypersonic motor orders slow down, that stock price could correct violently. It has a very long way to fall.
So the analysts are calling it a speculative play.
It is officially rated a speculative buy or hold. You are betting purely on the supercycle of defense spending continuing uninterrupted.
Which brings us perfectly to the macro picture, the political tailwinds. We were recording this in late February 2026. The political landscape in Washington has shifted significantly since the last election cycle.
Oh, massively. We have the Trump administration back in the White House and a GOP-controlled Congress.
Yeah.
And the policy shift at the Pentagon is palpable. There's a huge renewed emphasis on the industrial base.
We keep hearing this historical phrase, arsenal of democracy, coming back into vogue.
Because the new administration is putting immense public pressure on traditional defense contractors. They're basically telling them, stop buying back your own stock to boost your share price. Stop paying out huge dividends. Use your record profits to build actual factories. We need physical capacity, not financial engineering.
It's a total shift from Wall Street priorities to industrial engineering.
Exactly. For the last 10 years, legacy defense companies artificially boosted their stock prices by buying back shares. Now the DoD is saying, no, build stuff, build production lines.
And Kratos, culturally, fits that new mold perfectly.
Eric DeMarco, the CEO, has been very, very vocal about this for years. He says openly, we don't do buybacks, we don't do dividends. Every single dollar of profit we make goes straight back into R&D and manufacturing.
So politically, they are totally aligned with the new White House directives.
They are basically the teacher's pet right now. While the legacy primes are getting yelled at in congressional hearings for enriching shareholders, Kratos can point to their negative cash flow and say, look, we are spending every dime we have to build rocket motors for the warfighter.
That buys them a lot of political goodwill.
It absolutely does. And in this industry, political goodwill eventually translates directly into sole source contracts.
It really feels like they're trying to be the Ford of the defense world. Not the boutique Ferrari, but the Ford. High volume, mass production.
Or maybe the SpaceX of the defense world is a better analogy. Taking a bloated, slow, hyper-expensive industry and disrupting it with cheaper, faster, attritable technology.
So let's try to bring this all together. We have covered the core philosophy of affordable mass. We've covered the immediate cash cow of the hypersonic test beds. We've looked at the long-term bet on scaling the Valkyrie drones and the hidden gem of the open space software. What is the final verdict here?
The overarching verdict is that Kratos is officially at an inflection point. That is what the title of this deep dive suggests, and the data completely supports it. They have successfully moved from science projects to production lines.
The days of just building cool prototypes to show off in the desert are over.
They are cutting metal. They are pouring millions of dollars of concrete for new factories. The hypersonics are the bridge. They provide the massive cash flow right now. The drones are the future. They provide the exponential growth later.
The ultimate risk is execution.
The risk is entirely execution from here on out. Can they actually scale from building 8 drones to 40 drones without massive quality control issues?
Right.
Can they deliver 120 complex rocket motors on time next year? Can they manage $1 billion of newly raised capital without wasting it on bad acquisitions?
It's a show-me story now. Wall Street is saying prove it.
It is. But if they pull it off, if they execute, they become a major Tier 1 prime contractor. They officially graduate from the kids' table to the grown-ups' table at the Pentagon.
And for you, the listener, that is the main thing to watch. Don't just watch the daily fluctuations of the stock price.
Right.
Watch their actual production numbers. Watch the physical delivery.
Exactly. Ignore the market noise. Look at the factory floor. If the Valkyrie drones are actually rolling out the door on schedule, the investment thesis holds up.
Before we wrap up, there's one thought I keep coming back to that the sources hint at but don't fully explore.
What's that?
If Kratos actually succeeds in this, if they prove that cheap, software-driven, attritable swarms can defeat exquisite billion-dollar hardware, it completely upends the century-old business model of defense.
It destroys the old model.
Right. The big primes might be forced to cannibalize their own cash cows. We might be moving from a world of hardware wars to software attrition wars. And if that happens, the company that builds the cheapest, most reliable truck for that software is going to own the next century of defense.
That is a fascinating way to look at it. They aren't just building a new plane, they are forcing a paradigm shift.
Well, that gives us plenty to mull over. From the high-speed chases of hypersonic testing to the silent orbit of software-defined space networks, Kratos is definitely one to keep on your radar.
Absolutely. It's going to be a wild couple of years for them.
Thank you for listening to this deep dive. We hope this gave you a much clearer picture of what is actually happening behind the curtain at Kratos Defense.
Risk defined, portfolio protected.
We'll see you next time.